It's challenging to grow a small asset management business when all the other, options out there are so much bigger, have been around for longer, seem like they're more secure and safe to, California pension fund or teachers fund or all of these allocators.
Hey, welcome back to another episode of the Growth and Scaling Podcast. I'm your host, Todd Westra, and today is an awesome day because today we're talking to someone who has not only grown his own business, but his business is helping to fund seed rounds and early stage investments into businesses like yours. So if you are someone who is trying to grow and scale right now, maybe you're just in ideation stage, maybe you're in growth phase, either way, you are in a position right now where you're considering how to grow and scale your idea or your business. This interview is going to open your eyes to what people see on the other side of the transaction. What are they looking for? Who are they looking for? What types of groups should you be looking to trust with an early stage round of fundraising? And more importantly, what does business look like from their side of the aisle? This is a really, really interesting interview, and I think you're going to love it. I suggest you share this with anyone you know who's considering raising money or has raised money, and maybe they raised the wrong kind of money. There is a wrong kind of money to raise and a right kind of money to raise. And I love this interview because you're going to get some insights as to what to them, or at least to this group, makes a good raise. With over 100 different investors in their group as they invest, it is a fantastic insight, fantastic growth experience. And I love the way they've grown their business while they're trying to help people like you grow yours. I'll see you on the flip side of this interview, and I'd love to get your feedback in the comments below. Don't hesitate to leave some comments. We'll get back to you right away. Thanks so much. Hey, welcome back to another episode of the Growth and Scaling Podcast. Today, we're going to hear about growth and scaling from a side you don't normally hear about, and that is from the money guys. So today, I'm excited to have on our show, Ezra Gardner. Ezra, tell us who you are and tell us what your business does.
Sure. So my name's Ezra Gardner. I'm the co-founder of an asset management firm called Varana Capital. And we started the business about 11, 12 years ago. My business partner and I, both of us came from Wall Street backgrounds, both investment banking and asset management. And the easiest way to describe our business for someone who doesn't know us is that we are an Evergreen VC fund. We invest in startup businesses. We have a particular focus on Israeli technology ecosystem, and we help founders.
That's big.
We help founders grow their business, develop partnerships, and ultimately, take the companies public or sell them or merge them with other businesses. That's I think the 2-second way to describe what we do.
I love it. I noticed on your profile that you guys have a Denver office and a Tel Aviv office. So I was wondering what connection you had there to Israeli business. Tell us why are you doing that and what's so unique about the Israeli tech market? Because I know it's huge.
Yeah, I mean, it was honestly a choice. My mother is Israeli. She was 9th generation born in Israel. So we have a lot of roots there. And I actually moved about 16 years ago to Israel to help build an alternative asset management business there after being in New York for about 13 years. And when I left Israel to start this business with my partner, I'd already developed really great relationships there. It's an amazing place to do business. The people will drop things on a hat to meet with investors. So, if you go there 10 years, 4 times a year, you're one phone call away from anyone. So it's a very approachable ecosystem, and we love it.
That is awesome because I personally have subscribed to a lot of SaaS products out of Israel. I know that there's a huge infrastructure there for tech for some reason. And it's interesting to me, you got Silicon Valley, you got Austin, you got Salt Lake, and then somewhere in the mix, you've got Israel. How did you start that investment round, your first investment rounds, and what kind of groups are you looking for over there? Who are you trying to help?
Yeah, so listen, Israel is a B2B business environment, right? It's a very small country, right. So you can name on one hand the big B2C products that came out of there. Because if you're an aspiring entrepreneur and you want to build a big business, you got to go B2B.
Right.
And this creates a very
Right.
unique opportunity for us, because at the end of the day, what is the market that Israeli startups are most interested in getting into? It's the United States.
Right.
And so to have experience both
Yeah.
Israeli and American and help bridge these companies from Tel Aviv to New York, from private to public, we're situated well. And that's why Denver, Tel Aviv.
I love it. Love it. Love it. Okay, so 13 years New York, another decade or so in Israel, and then you come back to the US and you're like, okay, I want to start a fund. Tell us about that growth journey. You've been doing this now for about 12 years in your own investment form. How did you build that, and how has it grown to where you are today?
So my business partner and I both had quite a bit of experience in the asset management business before starting this company. And we thought the dirty little secret is that there's a misalignment between the managers and the investors, because the investors are putting in a tiny fraction of their allocation and the managers are putting in all of their money. And therefore the managers, they need to raise a lot of capital to get management fees to diversify themselves. So when my business partner and I started this, we decided that we would change the rules and we would invest our fund exactly like we would invest our personal accounts. And, we laid out these rules very clearly. And we had no idea that anyone would join us. And in fact, in the beginning, no one did, unsurprisingly. It's very hard in the asset management business. We can talk about that. But now, fast forward 11, 12 years later, we have, almost 100 limited partners. They're all high net worth or ultra high net worth families and family offices. Most of the people actually that are our partners, and we do call them partners and we treat them like partners, are actually C-level people at some of the big technology companies that you would know the name of, and they become part of our partnership. They help us with due diligence, with deal flow, partnerships. It's worked out well, but the beginning was challenging. It's challenging to grow a small asset management business when all the other, options out there are so much bigger, have been around for longer, seem like they're more secure and safe to, California pension fund or teachers fund or all of these allocators.
I love it. Honestly, in point blank, as someone who has been a startup founder several times, we oftentimes look at a venture firm or someone who's doing a lot of seed investing or early stage investing as sharks, and we get nervous about people like you. And I'm saying this very, very transparently because I know that a lot of people listening to this feel the same way. The thing that I think most people don't think about from that perspective is you are trying to do the same thing that every startup founder is trying to do with their business, and that is generate positive cash flow.
Yeah.
You are trying to invest in something that's going to make you some money back, just like they should be thinking about how they reinvest in their business. How do you answer someone who acts a little skittish about talking to you about investing in their opportunity?
Listen, I've got bad news for you. Unfortunately, you're right that a lot of people in my business are sharks, and they do act very sharky. That actually is the opportunity that my partner and I saw, that if we could actually try and be more fair, stress the partnership, be long-term investors, that we would get better partners. And indeed, that's what happens. And it takes time to build this reputation though, right? Because, initially, if you come to me and you're looking to raise money and I say, Todd, listen, I only do deals that are good for both of us. If it's not good for both of us, I'm not going to do it. And trust me, even if it's against my interest, if I think there's something better for you to do than to take my money, I'm going to tell you that. And the day I started the business, I could say that to you and you probably wouldn't believe me. Today, after 11, 12 years, I'll just say, Todd, call up anyone who knows me and they'll tell you that that's exactly what we do. And that was the hardest part. I'm jumping the gun maybe, but that was the hardest part of scaling our business, is that in the money management business, you need reputation, and reputation can only be built over time. It's not like a microprocessor where if you figure out a better way to do it, you can do it in a year or whatever. It's time.
Right.
You need to have successful investments, successful partnerships, and that only comes with time.
Hey, this is Todd again. Thanks so much for enjoying this episode of the podcast. I am so glad you're here, and I just wanted to take a few seconds to tell you about a program that we have assembled with a lot of our podcast guests and a lot of people who are listening to the show who are feeling the same way that they do. There's a recurring theme. You'll hear a lot of these founders talk about, I couldn't have done it without my team. I couldn't have done it without a support group of peers. I couldn't have done it without having someone to talk to that understood my feeling of isolation as an operator of my business. You see, you're not alone. It is hard running a business, and it's even harder when you know you can't express all your deepest concerns and frustrations with your executive team. It makes them nervous. It gets them scared. You don't want scared people on your executive team. So where do you turn? The Captain's Council is where you turn. The Captain's Council is an organization that we are put together with podcast guests, as well as people who are listening who are in the same boat. You see, peers are the only ones that can give you the type of empathy, the type of advice that only a founder or operator know and understand. Go check it out at captainscouncil.com. I know you're going to love what you see there. We have put together an organizational structure that has small group settings, a global community of founders and operators, as well as monthly and quarterly in-person events. You're going to love what you see there. I can't wait for you to check it out and enjoy the rest of this episode. I love it. I appreciate you saying that. And I knew coming into this conversation that you are not a shark. And I know that to be able to invest in early stage companies, they need to feel comfortable with people. And if you've been doing this for 12 years, obviously you're a good guy because people do trust you and they've had positive experiences with you. So I appreciate that response though. And truthfully, as we talk about your business model, before we get into that, I just want to, I want to be able to set the stage a little bit clearer for people. Who, in your opinion, should be looking for early stage funding, and at what stage of their business cycle should they be looking for that? Do you suggest pre-revenue? Do you suggest at revenue? Do you suggest burn it for a little while, bootstrap? I mean, what do you look at?
So listen, when you have an idea on a piece of paper and you want to start a business, all right, and you need money to do it. Some businesses you don't need any money, but let's say you do need money, okay?
Right.
The only people that are going to give you money initially, are your friends and family. And you need to go and bet on yourself and call in your chits, your relationships, your friends and family relationships, raise a little bit of money. You need to set milestones for yourself and say, this is a KPI. This is a thing I think I can achieve from a development perspective, from a production perspective, whatever it is.
Right.
And then go to the VCs. You should go to the VCs next because they'll do, first is called friends and family. Then you've got seed, round A, round B, on and on. And we do everything. We do everything from seed on. What we don't do is we don't give someone money that we've never met before on the back of a napkin. That's the lore of the 1960s and 70s and Sand Hill Road. I'm not sure that exists anymore.
No, and Sand Hill Road is a lot different than it was in the 60s and 70s. So
that's right.
So tell me about so you're looking for people that actually have a strategy, that have a plan, that have at least attempted to raise money from friends and family. And now they're kind of feeling stuck, like, okay, we've made a little momentum, help. What does that look like from your perspective?
Well, for us, and not everybody is the way that we are. Someone may want to take a great grad student out of Stanford who did a thesis project on something and have them do that. We actually want to have founders and CEOs that have built something before. And it doesn't have to be on their own, right? They could have been two guys at Intel that managed a product development, and now they have an idea for a product that Intel doesn't want to build, that they want to build. This is a real life study from one of our companies, one of our CEOs that I just spent the last 2 days with. That's why it's top of mind.
I love it.
Those are the type of people we like to back.
I love it. Okay, so now let's jump to your business. Now that we know what you do, who you help, and that kind of persona that you're looking for, tell us about your business. I mean, you mentioned already that you went from you and your partner to almost 100 different sub-investor / partner people. how in the world did you do that, first of all, and how do you manage that in the type of business you're in?
So we started the exact same way that our founders started. We went to friends and family first, the people that knew us, that trusted us, and we said, "Hey, you know us, you've worked with us, you know, you've seen our integrity, give us money." And they did, and it worked out. And then we just drew concentric circles around them. I mean, that's literally how it goes. You have to start with what's closest to you and build concentric circles outward from there.
I love it. I love it. And so over the last decade, you've built it up to 100 people. Where do you see it growing into? What is your strategy? And where do you see an exit or a happy place?
You know what, Todd? We've never spent any time thinking about that up until now, and I don't think we're going to start to. It's been very organic. One thing, at every stage, we thought that such and such would be too big. We wouldn't be able to handle such and such is too big. And as we've been able to grow and build infrastructure, find other people to work with, we've done that. And we'll know when we can't do that anymore, and we'll just stop. We'll stop growing. There's a cycle to the investment management business, right? There's planting, watering, reaping, sowing. You go through all of these stages, and and then if you decide you want to and you're enjoying it, you next season comes, you plant again.
I love it. Very cool. I'm curious, how many of your initial investments turn into future rounds with you or your group?
You mean how many times do we follow on and invest again with the same company?
Yeah.
Very frequently. That is 100% our strategy. Our strategy is to start small with a company and negotiate some ability to add money in the future, because there's some kind of fallacy that you meet someone in a coffee shop and they draw something on a piece of paper and you just know it's going to work. It doesn't work that way. You have to get under the tent. You have to get to know the people that you're investing with, and as you get to know them better and they prove they prove their ideas, they prove their integrity, you continue to give them money. And the ones that don't, they fall away, and it's no harm, no foul, because it was just small bets.
I love it. It's very smart, very smart. And how have you touched earlier upon some of the biggest challenges that you've had to face in your growth journey. Is there anything you want to add to that? Because everybody out there knows that growing and scaling, it looks sexy, but it's not always awesome. How have you dealt with some of the challenges you've had to face?
The capital that we need, or the building blocks that we need in our business, I told you number one is reputation, and that just comes with time, right? But the second one is human capital, talent, and that's our limiting factor. We have to find people that we love to work with, that are smart, that are trustworthy, that work all the time at finding great investments, at helping the portfolio companies, and those are people that are hard to find, right? And so that is one of the biggest challenges, I think, to the investment business, is finding the right people and hiring them and working with them.
I would say that's a problem across every industry. It's funny. I've done a lot of these interviews, and on the challenge side of the business growth, it's almost always people. And yet on the other side, I oftentimes hear their favorite thing is their people. So how do you resolve that issue?
So what did we do? Because my partner and I had already been working for pretty decent part of our career before we started this business. What we did is we went back and recruited people that we knew and liked from the past. Because I'll give you an example. I was working prior to starting this business at UBS. I was running their North American principal investments business. And, we had a very large team, and it always seemed like I was interviewing, and it always seemed like I was hiring, and it always seemed like I was firing. And one thing that I learned was that you have no idea after the interview process if the person is going to work out or not. It's a year, 2 years, right? So instead of having known that that's just a challenge or a fact, and maybe it's just me, I don't know, maybe other people do know during the interview process, who's going to work out. What I decided to do, I decided to reach back into my past, someone that I'd worked with for a long time, knew, trusted, liked. And I said, hey, come do this with me. And they said, well, what are we going to do? And I said, I don't know, but we'll figure it out. We'll do it together. And I knew that there was zero risk of failure of a hire like that.
Love it. Love it. I think that's fascinating advice. I think it's smart advice. And you know, it is nice to know that the people you're working with, they understand their role. They understand where they need to fit in. Now, my question for you is in regards to people, because I love asking people this. You know, a lot of times businesses fail in their growth strategy because they don't identify the roles of what they expect each of their employees or their teams to do. The outcomes aren't very predictable, and so they don't know what to even ask of them. Clearly, you've done some right things, and clearly you see right things done by your investments. How do you kind of work through that problem of identifying the roles? Because you could hire the most incredible person from your past. If you don't identify what you expect of them, you're going to run into problems. How do you avoid that?
Well, you know, in many ways, I think that my business is a lot easier than our portfolio company's businesses, right? Because, you know, we can build a really big business with a dozen people. You know, portfolio companies that we have, they need to scale up from 0 sometimes to 50, 100, 250 people in a relatively short amount of time. And that's really, really hard because you actually do need to put in place, I think what you're referring to is some real structure, you know, some silos of who's doing this, that, and the other.
Totally.
For us, it's sort of easier. We're all trying to do the same thing. We're all trying to identify companies to invest in, trying to research them. And then the most thing that we do is we're trying to help the companies. So what we do is we go and we spend time with our portfolio companies and we ask them what they need help with. We ask them what are their challenges, and we say, give us everything. Give us the list of everything that you're having a challenge with. And we hope that there's a few things on that list that we can help out with. And then that determines what we do. And then we come back to Denver, come back to Tel Aviv, and we say, you know, whomever, hey, listen, such and such company needs this. Figure out how to do that for them. I think that you would be good at this. And so it's almost like project based, if that makes sense.
Love it. No, it totally makes sense. And I love that model. It's a great model to have because you're bringing in specialists who really know how to help them fix that specific problem.
Yeah. And don't forget what I told you before, you know, 100 limited partners that are C-level people across a wide array of public and private companies. We reach out to them. We utilize them. You know, that's the strength of the partnership. And so basically what we tell people is we say, we never just write a check. If there isn't something that we can do beyond writing a check, we're not your partner. There's plenty of people that can write, you know, checks. We have to be able to do something that we think can influence the outcome, increase the probability of success. Otherwise, we're shooting in the dark, and you may hit something.
Right. Totally get it. I love and appreciate that. That's really cool. Now, in your own business and your own growth journey, you know, 12 years into this thing, there's someone along the way who has inspired you, kept you motivated, someone that's kind of set the example of where you've been able to grow your business to at this point. I'd love to hear a shout out of that person and just kind of see how we can make their day a little bit brighter today.
Well, you know, I hate to sound and say something so obvious and boring, but, you know, for the last 25 years, I've been going every year to Omaha for the Berkshire Hathaway conference. And it's like a reboot for me every year to see that there's a guy now 92 and 99 years old that coming to work every day, skipping and just sticking to, you know, bread and butter principles. And that's inspiring to me. And it's always like that reboot. It's about to come, by the way. This is the time of year in a few weeks. So, you know, that's the reboot.
What is the event?
The Berkshire Hathaway conference.
Oh, the Berkshire Hathaway conference. Yeah. Oh, heck yeah. Interesting. And you've been going that for 25 years.
Yeah. I take,
that's
you know,
so cool.
One of my, you know, very close friends and colleague has been my partner going there every year. And we now take our sons. So it's coming full circle. It's been really fun.
Very cool stuff. What a blessing. I absolutely love that. And thank you for sharing that. We'll have to give the big man a little shout out here, and thanks for inspiring you.
I
Dad'll see it.
I'm one of many acolytes, I would say.
Oh, I'm sure. Yes, I know you are. That's awesome. Well, listen, I appreciate so much your insights today. This has been a fantastic interview. And for those of you listening who are on your growth scale journey, you don't have to be afraid. Interview, find the right people, find the right guys like this group here who have a very specific niche, have a lot of passion for what they do, and their investments are much more than just a check. If all you're getting are blank checks from people, worry a little bit because you might be getting taken advantage of. When you get people who are invested like these guys, it should work out best for you in the end.
I'll tell you.
Any thoughts you want to add to that?
Yeah, I'll tell you something funny, Todd. So a lot of times I'll get an email or a call or a text from someone. They say, hey, sheepishly, they'll say, hey, would you take a look at a company? Would it be a bother to you to look at a company? And I always tell them, listen, there's only 3 things I do all day long. Look at companies, help companies, and talk to my investors. So if you have a client out there, a friend, someone that's thinking about asking to show their pitch deck and asking to raise money, you shouldn't be shy. Doesn't mean you're going to succeed, but all we're doing here is looking at companies. So, reach out. Don't be shy about that at all.
Love it. Love it. I appreciate that. And for those listening that do need someone to bounce this off of, please reach out. There's 100 people there willing to review your proposal and give you some push, give you some ideas of what you need to do to show you're worth investing in. So thank you. I honestly appreciate it, Ezra. You've been a great guest, and I appreciate the insights. For those listening, keep on listening. These episodes just keep on coming, and we've got some amazing insights here to share with you. So thanks for being here, Ezra.
Thank you so much.
Hey, welcome back. I hope you enjoyed that episode. Share some thoughts below of what you thought was cool about that interview. I'd love to know what you didn't know about investors. I'd love to know whether you want more interviews like this, where people are talking about what they're looking for in an investment, what they're looking for in an initial raise, what they're looking for as you progress as a business. What does the stage B and C look like? These rounds are all individual and unique, and not everybody raises money, but I would say the majority of businesses do. And I would say the majority of businesses that bootstrap their way to growth are successful, but it can be accelerated with the right type of money partners. So I hope you love this episode as much as I do. I did. I really did. I thoroughly enjoyed it. I hope you share this with people. I hope you like and subscribe to our channel. This podcast is here for you. This is all about you and the growth and scaling journey of your business. So share with us the details. Join our community. We would be happy to have you on board to talk to us more about your growth and scaling journey. And we look forward to seeing you on the next episode. Thanks so much for being here.